Welcome to Option Trades Today. I'm Tony the Bat Batista and I have a trade idea for you today. January 16th, 2024. But first, let's take a quick look at what's going on in the market. Even the S&P is down 5 handles. You can see here that they're well off of their lows of 47.83. Over 4,800 again, down $6.50. NASDAQ leading the group higher, up 32. Russell is the one that's kind of trying to take the market lower, down 14, and the Dow down 181. I say the Russell is trying to bring us lower because on a percentage basis they are the lowest. IV rank ticking up in the Russell, which is kind of nice when you look at the EM and the S&Ps. IV rank is ticking up, as you can see here on the bottom of this chart, but still 13%, much less than in IWM. When you take a look at what's going on in the overall market, I like to take a look at the watch list that has the high option volume here. There's a stock that kind of came to my attention. It's Coin. Let's see how it looks on this chart here. You'll notice that Coin has, when I get to it, there you go, has earnings February 20th. You'll notice that the IVX 5-day change is up 4%. We like to see that in the green when we're putting on a trade that's going to sell premium. And the IV rank is 34. Stock is up $2.40 today right now, but you can see it's already had a $10 range, 126 and change up to 136 and change, and it's sitting at 133 and change, about $3 off of its highs, up $2.55 right now. Let's take a look at what Coin has done over the last couple of days, and you can see here as Bitcoin, which has been going lower, we'll put it over here, $43,000 and change. I'm looking at the cash right now. Bitcoin has been bringing down Coin itself. Classic buy the rumor, sell the news with all of the Bitcoin ETFs coming out. But Coinbase, as we're looking at right here, trading 133 and change, has had a significant move down from around 185 and so to 133 over just the last 2 weeks or so, especially the last couple of days. Look at the IV rank, upticking ever so slightly again today, as it has over the last 5 days, up 4%. Let's take a look at what we can do in Coin. Now, I did say, and I wanted to mention to you, that earnings are February 20th. We like to go closest to 45 days in the monthly options. That would bring us to March, not these 45-day weekly options. You'll notice, and I haven't looked, so we'll take a look. But yes, you'll notice that the markets are quite wide in here. They're not that great in March either, but they're a little bit tighter, 15, 20 cents wide, 15, 20 cents wide. I'm going to do something a little bit different here. I'm going to stay at 45 days is optimal. We're about 14 days away in February. We're about 14 days away in March. I would typically default to March. I'm going to stay in February to avoid these earnings coming February 20th, as this expiration is February 16th. So that's my reason for going a little bit shorter dated than I normally would like to. If there was no earnings, I definitely would be doing March options. I'm going to click open these February options, and even though the markets are a little bit wider here, as you can see, 15, 20 cents wide, let's see what the volume looks like on these options today, because that's a good way of seeing if this is a place where we should put on a trade. You'll notice that volume is right here. Plenty of volume, a lot on the call side, a lot on the put side. There's certainly volatility in here. Let's take a look at the open interest just to see that it's not a one-day anomaly that's, that the stock is in play. It's moving $10, and you can see thousands on each side. As long as there's liquidity, meaning that there's a lot of volume, a lot of open interest, tight bid-ask between the options, then it's a type of trade that I would like to put on. But I'm going to put something on that has defined risk. Now, I'm going to lean ever so slightly long, so I'm going to have more risk to the downside. Let me show you what I'm going to do. I'm going to go to the 140 calls and sell those and buy the 145s. Now, that is a standalone trade, has a 64% pop. For me, as long as it's around a 65 to 68%, I prefer 68% and above, but as long as it's around that standard deviation as a standalone trade, it fits my assumption. You'll notice that this has 5.5 short deltas, and I wanted to lean a little bit long in coin. But again, 40-45 call spread, $5 wide. I'm collecting around $1.75. That's the mid price. I'm going to go down to the 120 puts, sell one of those, and buy one of the 110 puts. Now you'll notice I was getting about $1.75 for the call spread. I'm getting about $3 for the put spread. I've now changed my deltas from negative to long deltas, almost 5 deltas, which fits my assumption. I'll get to this pop that's only 33%, which is very low, and normally I would not make a trade that doesn't have a probability of profit, very, very important, at least 65 or 68%. But let me go through some of the metrics here. Your buying power effect is the difference between the widest spread that you have on and the credit you received. So 472 plus 528 equals $1,000, because $1,000 would be your risk on the downside if you sold this for zero. Since you're selling this whole package for $4.72, your buying power effect is $528. Look at your max profit. Your max profit is $472, because if we stay in between just over 120 and just under 140 at expiration 31 days from now, you make $472 on $528 worth of risk. It's basically risking one to make one with only a 33% pop. That's not good. But let me show you something what happens, because your real risk to the upside is what? Your real risk to the upside is 28 cents or $28, right? Because everything is a multiple of 100 here. 4.72 is really $472. 0.28 equals $28. So if we go to 200 on coin at expiration, this whole spread would be worth $0, this 120, 110 put spread, and this spread would be worth $5. You would lose $28. So let's change this to 501 just for purpose of demonstration. And you'll notice that your pop goes up to 67%. Of course, your delta and everything stays the same. Your max profit is going to mirror exactly what your credit is. But what I'm trying to demonstrate here is, since you have no risk to the upside, meaning that if the stock goes to 200 again, in my example, this $5 spread would be worth $5. You sold it for 501, you make $1. The computer shows you a 67% probability of success. Now, when I let it float back down to where it's trading at, I actually sold this, I believe, at $1.69. We can take a look at that on the follow page in just a second. You'll notice that my probability of profit is 33%, and that's probably a profit of not losing at least 1 penny. I just demonstrated how we're going to lose 28 or 29 or $31 if the stock goes to 200 here. For all of us watching and listening this podcast right now, and now that you understand that the risk to the upside is extremely limited, as a matter of fact, if this stock were to go significantly higher to 150, 160, this put spread, the opposite side of this call spread, would have some value, and we probably would break even on the trade. So let's just say, for argument's sake, that we sold this at $5 or a little bit over, just so that we know what our break evens are. Our break evens then would be 145 to the upside, and to the downside, it would be 115. So if the stock stays anywhere in between those two prices at expiration, we make some money. So I look at this trade, and this is why sometimes you have to go a little bit further than what the computer really gives you. Although the computer shows you it has a 33% pop, I look at it as a plus 60% pop on this overall trade. What's my goal for my $500 in risk to make almost $500? Well, I'd be looking to make $100 to $200 on this type of trade with the minimal amount of risk relative to the other trades that I put on in this podcast, $531. Let's go to the follow page real quickly so I can show you this trade. We know it as an unbalanced iron condor. I will put it up here. You'll notice in coin earlier today, I closed our last trade that we put on, which was probably the hardest 20 or 25 cents I've ever made in my entire life, that I put on back on 11/28, which was showing you how to make 4% risk, 4% money on the risk that you had in that trade. A little bit of a broken wing butterfly, relatively tight. Never really got direction right until the last week. Really never took any heat on it either, maybe a couple of bucks. In Moderna, you'll notice here that I'm rolling down the untested side on the existing trade that I have, so you can follow along all our trades. And here's my trade from today, a skewed delta long, unbalanced iron condor. It's unbalanced because I have $10 worth of risk to the upside, to the downside, $5 worth of risk to the upside. I collected $4.69. I look at it as having no risk to the upside, and instead of having a 33% pop, it's more like a 65% pop. All right, everybody. I hope you enjoyed that little bit of lesson and maybe some of the nuances to the Tasty Trade platform. And you know what else you can do? You can open, move, transfer, bring your account to Tasty Trade. I think we'll even give you some sweet, sweet cash for moving, transferring, bringing, or even opening up a new account at Tasty Trade and help me keep the lights on.